Welcome, everybody, to another episode of Amplify Your Business. Today, I'm talking to Josh Furstoss. He is the CEO and co-founder of Incued. And I'm really looking forward to this conversation because this guy's done a lot and he's right now at a place where so many businesses find themselves where they're looking to grow, they're getting some funding and actually working on the second round of funding. And so there's exciting things happening in his entrepreneur journey. So welcome to the show, Josh.
Hey, Lance, thanks.
Okay, so first off, I like to ask everybody out of the gates here, what are three things based on your experience as an entrepreneur that every other entrepreneur out there should know?
Um, Everything's going to take twice as long and cost twice as much.
Yeah.
Um, Building a team, don't just scramble to get a team together. I think it's actually better to build out infrastructure by yourself or one other person that you're close to that you can trust, and then start bringing people on. I think that people try to build a team way too early, way too early, and then they try to fill maybe this is the third one. They try to fill the knowledge gaps they have by hiring people. And the reality is you can do that to some extent, but if you don't know anything about marketing whatsoever and you try to hire your way out of marketing, then you have very little understanding of how to measure that marketing person and what they're actually worth. And I think you need to develop the baseline of these skills to understand what you actually need before just filling gaps with more employees.
Now, I want to probe into that last one a little bit because that is contrary to what a lot of people say, and like what is in a lot of books, of business books as well, where it's always about filling the gaps, know the value of your time and don't waste your time and energy doing things that you could hire out. You can only be an expert in so many things. But I think your point is extremely valid in terms of how do you actually measure somebody's performance if you have no idea what that role entails, essentially.
Yeah, I think you need to have a general knowledge of everything. Your job as a CEO is just to be the generalist, right?
Yeah.
You have to know a little bit about every single thing you're doing. And I also kind of question a lot of these books, to be completely honest. Like the Business Model
Yep.
Canvas book, I have never actually met someone that has functionally used a Business Model Canvas effect, to any level of success. So there's, I don't know, build the business, you'll learn yourself, and just, learn things as you need to go. I think about it almost like modularity, where I need to learn this, then rapidly learn it and just do it the easiest way possible. You need to get a website, just get a website up, put your name on it, put a wait list there, and then just move forward. I think a lot of these things can be done way simpler than most people try to do them, and they generally overthink them, and that becomes fairly inefficient.
Yeah. I can relate to this in two different ways. So my business, Ample Media, before I would actually add another service, I tended to try to sit within that space a little bit myself to try to understand how to do it. And then obviously, build a base level of that knowledge so that when I built the team then to actually deliver it, then I knew enough where and also I knew enough to figure out how to price it as well. That was the other issue. Is it's like, okay, well, how do you price the service? At the beginning, I'm wildly inefficient, and somewhat ineffective, I suppose. And so you can't really base. In our industry, it's a lot of fee for hours, right? And so
Mhm.
you couldn't really base it off of that because we didn't have the efficiencies built in. And so it's like, okay, so we want to almost kind of prototype it, test it out a little bit, do some trial delivery, and then start to build the proper team, and then actually figure out how to price the darn thing. And so that was one way that I can relate to this. And then the other way is really just that need, I think, sometimes for us as entrepreneurs to kind of control a little bit of it. And that's another thing that a lot of people talk about in a very negative way, is that you just need to kind of almost blindly trust your team or outside experts or whoever. But I always felt that if I didn't have a little bit more control at the early stages, I ended up with some failures, some big failures later on. And so I like to control that process a little bit. And I don't think that's necessarily wrong. I don't know how you approach it from that perspective, but that was one thing that helped me.
I think that's generally how I think about it. Like, I guess what I'd add is that you need to have an extremely high trust team. Like, low trust teams
Yeah.
can lead to dramatic failure. And then the control mechanism really comes around creating guidelines from a strategic level, not from a tactical level.
Yeah.
So it's like, it's almost you need to design the game, and then other people can figure out the game and play the game. You
Yeah.
know,
Yeah.
so like I find that if control is overbearing, there's inefficiencies in like productivity. But if you explain the game to someone and align the incentives correctly, and you trust them, then you'll see really high productivity out of them.
Yeah.
So it's
Yeah.
like the control is more the controlling of the prism through which people understand the job they have to do, not through micromanagement.
Yeah. Okay, so let's move on to Incued. Tell us a little bit about the business. What problems are you trying to solve over there?
So we do real-time financial data on private market assets, which is a lot of words to say that we let venture capital firms, private equity firms, investment banks, lenders, etc., understand how the portfolio companies who they're lending money to or investing into are performing, what their revenue is, the spending, the like everything effectively on those companies. Currently, how this works is people send Excel documents, PDFs, updates over emails, static information, which can be fraudulent. It can be just generally poor quality data.
Yep.
And it basically increases the risk parameters around these investments and loans in a pretty dramatic way. And you can see also some examples of this in like the media, where it's like the Frank case at JP Morgan, where they like didn't do a diligence effectively, and they lost like 125, or I think it was 175 million dollars, and now they're in like a giant
Oof.
court case over it.
Yep.
So the stakes here are pretty big. Our long-term goal is to create a Bloomberg terminal for the private markets. I think that the markets in general are driven by the overall search for liquidity. So by enabling liquidity to come with greater ease, we can have greater efficiencies in the markets, which can lead to more innovation. I know that was a lot, but
Well, I think that's a really a great goal. But just to reiterate the one part that you said there, which is kind of de-risking the portfolio a bit, the investments that these people are
yeah.
listening in. I mean, it's such a huge risk profile that these companies, these investment companies are trying to navigate through. So I would imagine any tool that they have at their disposal to try to minimize that or control a little bit more of that risk is going to be something that's really appealing to them.
Yeah, I mean, and the best way to think about this, it's not necessarily a one-to-one, but imagine when you were investing in stocks in like 1980, and you're
Yeah.
waiting on like the newspaper to say what the stock is, the next day.
Yeah.
That obviously was vastly less efficient than you looking on E-Trade or Robinhood and understanding what the stock price is literally right now.
Yeah.
Because there's massive amounts of opportunities for you to mitigate risk or increase earnings just in that one day, 24-hour period. Now,
Yeah.
for the private companies, what we're talking about is reducing this from a quarterly basis is when you're getting updates currently. So any kind of like efficiency increase in data gather and to have that data be validated allows for investors to mitigate risk and increase returns in a pretty dramatic function.
Yeah. Yeah. And so one of the things before we hit the record button that I really liked about what you're doing is the people who are investing in you are the firms that are actually your ideal customer set. And so you're getting a tremendous amount of customer information and insights from the people who are actually investing in you, which is very unique. I mean, most businesses don't have that ability to really leverage their investment community, the people who are putting the dollars in, for that kind of data mining, really.
Yeah, I mean, this is something we thought about like on the outside of the company that would make for like pretty high efficiencies. I think
Yeah.
that a lot of companies couldn't do this. So like there's a whole stream of corporate venture capital where it's like pretend you're making like, I don't know, agrotech. Then maybe you want like Monsanto to invest in you. Sorry, turn off your phone. Because then you have a built-in customer from your investment base. And
Yep.
it can help with distribution. And I think distribution is probably one of the largest hurdles for companies after they get product market fit.
Yep.
So yeah, it's incredibly convenient for us. It helps because our investors understand the problem we're solving because they feel the pain every single day, and I really appreciate their feedback. But I do think it's something that more people can do. Like the best investors for your product are probably people who experience that pain every day.
Yeah. Yeah. I mean, they're obviously the ones who are going to understand it the best and see the value that you're going to be bringing to the table with your solution, whatever that solution might be. I was talking to another entrepreneur yesterday in similar kind of situation where his investor was actually somebody he didn't even realize was a guy who would be an investor. He was just having a casual conversation with him, and they got talking about what it was that he was doing. And as it turned out, that was a pain that this guy was living every day with his business. And he called him up the next day and offered him some initial seed funding to basically have him stop his day job so he could invest all of his time in building the business. And so it's a similar sense there, where it's like if you can find that person who has that pain, you probably have a potential investor right there too. That's just cool.
Yeah, I mean,
Yeah.
it's like you just got to tell people what you're doing, and you'll find the right people, networking in the right spots.
Yeah. So now you've been at this for a little over 2 years, or right around 2 year mark, I suppose it is, right?
Yeah,
2021, I think you said is when you
yeah.
started the company. Okay. And so was this something that you had a background in the financial side of things, on the development side of things? Tell me how you got into this business.
So I have a background in probably the data side of things. Is the best way to think about it. And the like, I'll just kind of go for it. So I started as a software engineer. I've worked for like Samsung when I was like 19, 20. I ended
Okay.
up in college getting out of software engineering, getting into business, and I helped scale up a tech startup, actually in the medical technology space that was using AI so for some fairly exciting things. So I got to watch that kind of scale up before I even graduated. Um,
Hmm.
yeah, and then I ended up getting to the corporate world, and I was working on intelligence security technology that we were selling to governments and doing a lot of custom stuff there. So really, like a large amount of my career has just been solving really, really big data problems. Um, and the way I think about this is one really, really big data problem. It's
Yeah.
not really about like the financials is just that's just the mechanism by which the data represents itself.
Yeah, yeah. And so I'm curious about that experience that you said that you had when you were in school still, I think, right? As
Yeah.
you were part of and witnessing the scaling up of another startup. So the experience that you had there, how has that informed what you're doing right now with your business as you're beginning to scale it?
Well, I mean, like, I have looked at my life as like a series of watching adults make mistakes, which is like you have bosses and you're like, I don't want to be that guy, or like, and then
Yeah, yeah,
granted, like
yeah,
the boss I had at the startup was actually fantastic, but you learn a lot of mistakes, and I
yeah,
think that observing the mistakes is probably the most important thing there. You're like, okay, like they hired people too early, or like this, they didn't spend money correctly, or they didn't raise enough, or like they were too focused on adding features that customers wanted instead of like, you know what I mean,
yep,
whatever it may be at the given time. So I think it just gave me a lot of perspective. And I think that perspective is very useful. I wouldn't say it was like one little thing. It's like, yeah, like I made cold calls and I designed websites and like I went to conferences and I mean, I did all the small little things that somebody at that age does. But I think it's a lot of observing. But then there's also a good degree of like understanding CEO speak, of like
yeah.
you sit next to someone enough and you just like, oh, this is something I could do. And maybe that's something that I don't think enough people get, is just realizing that like having a venture backed startup is something you can just do.
Yeah.
It's really difficult. Like, I'm not trying to minimize that. But once you meet a few people that have done it before, you realize that like that is within the realm of possibility.
Yeah, it demystifies it, right? I mean,
Yeah.
there's a lot of people that if they don't have that experience, haven't brushed up against it. We see the Shark Tank in Canada here, Dragon's Den, and we 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 see it out there, but it always seems somewhat unattainable until you start talking to entrepreneurs who are in the space who are getting the funding, and
And those
and it's
deals are
like,
so bad.
yeah,
Those
yeah,
deals are so bad.
yeah, yeah. Well,
Oh,
and I think I've talked to a number of people who've been on those shows, and the reality of it is that the deal that's made on the show doesn't actually transpire at the end of the day, either because of the due diligence that was put in, or
Yeah.
it's just once they got into the fine print, the entrepreneur's like, no, this is like I'm giving away everything here. This is
Yeah, they
ridiculous.
actually realized they're like 200K for 40%, and I'm just like watching them like that is insane. Like you
Yeah.
are a crazy person. Like that is like
Totally. Well, now you have a lot of experience though too, talking to a lot of entrepreneurs, because you, from what I understand, was highly, or maybe you still are, highly involved in an incubator, and so you were a mentor, or still are a mentor to a lot of businesses. Talk to us a little bit about that and the way that you give back to the community a bit.
well, yeah. I mean, I guess it's giving back. I get paid to do it, so it's
Yeah.
it's more of we can. I don't want to portray it as charity work, I suppose. Yeah, so I'm an advisor at Alchemist Accelerator in San Francisco. They are the world's top BDE accelerator, and I help advise the Alchemist X GovTech program.
Yeah.
So I help companies with their go-to-market strategy. I help them with understanding how to talk to investors, with a lot of CEO coaching,
Yeah.
that kind of stuff. It's yeah, I've done 23 companies there, and then before that, this is more of a networking thing. But I was the head of Founders Network Chicago, where we had a few hundred members, and that was more of a community thing.
Yeah. So back to the incubator there, and what the like mentoring that you're doing. What are you finding to be some of the biggest mistakes that you're trying to basically train out of some of these new founders?
Well, so I should clarify. So it's an accelerator. So these are already funded companies for the most
Okay.
case. So
Okay.
these are like they have pre-seed funding and they're looking for like product market fit. So
Okay.
generally they're a little more developed. But to answer the question, generally it's hiring too quickly. Generally it's assuming you have product market fit far before you have product market fit. It's getting into large enterprise deals or hoping to get a large enterprise deal
Mm.
with some big brand that promises you the world, but then you're going to die by their slow bureaucratic process. And they want a billion customizations on your product that is going to kill it for the people who are actually going to allow you to scale. It's not being able to accurately describe the unit economics of the business and how it achieves nonlinear growth. It's a lot of the things that you're trying to figure out when you're moving from building a product to solve a problem to trying to get initial scalability to show that this can be a large enterprise potentially one day.
Yeah, and on the topic of product market fit, I mean, this is, one of the biggest challenges that a lot of companies face is really trying to figure that out, because they have a great idea, they get some positive feedback from the market, but they don't have anybody putting cash down on the barrelhead, so to speak, yet. And so you never really know if you have it. So in that situation, I imagine a lot of the businesses that you're talking to in that program are at that stage, right? And so what advice do you have to give them that would be, somewhat, I guess, general across multiple industries, and that maybe our entrepreneurs who are listening today would be able to take away and go, okay, I'm going to use that to try to nail my product market fit.
Yeah, I mean, I think it's just everyone thinks they have product market fit before they actually have it,
Yeah.
and then they proclaim that they do. So I would say that unless you are literally getting so many sales that you need to scale your customer success team and you are stressed out because you're scaling so quickly, then you probably don't have it.
Hmm.
I don't know if this answers your question, but I think generally um, that's how it works. And I think the best way to solve this is really doing product research. So it's doing customer interviews. It's taking a more methodical approach to product. I'm not necessarily an expert on this, but I think that Sam Altman, I believe, apologized for a lot of the advice that he gave at YC a little bit ago because he
Oh,
was
really?
talking about like rapidly developing products and like getting the MVP out there, and then proceeded to like raise something like $100 million to make OpenAI before they even launched a product. And then he like wrote a thing on his blog where he's like, actually, like sometimes to make a business, the capital input is vastly larger than I assumed it was before getting into this space. So it's filter advice really, really well. because like you're going to know what's right in your gut, and everyone's going to tell you what to do, and just sometimes you gotta think about it, ignore some of it, and do what's best for you. You'll figure out what makes your business work.
Yeah, yeah. And so when it comes to advice, there's a lot of people that feel that you need to have some sort of advisory board set up like early days. Some people talk about maybe waiting a little bit longer. Where's your stance on the fit of that advisory board, and at what stage of your business should you really be investing heavily in getting the right people sitting around the table?
Well, my number one problem is I think that most people that make early advice reports, including myself, I screwed this up and we rectified it and with this business. But people take on advisors too early, and
Mm,
they think that okay, somebody knows a little bit more than you, and then you assume they can help you with like a ton of problems going forward.
yeah,
But there's like someone that came out of corporate America and like has never made a startup before, and they know how to do things from that like consulting perspective or from that corporate perspective, and really it has no application whatsoever. So one, I would say that have shorter advisory board contracts. I would advise that,
mm,
and I'm not a lawyer, so don't take my advice, but 0.25% equity over probably 2 years is probably the best way to do it, with 1 year vesting period and then quarterly or 1 year cliff quarterly vesting. I think that's probably best. Shorter contracts are probably better. You can even do a 6 month or a 1 year contract for even less than 0.25% at the earliest stages, and I think that makes sense because if you are good at rapidly taking in information, you're going to realize that you're going to grow past a lot of these people fairly quickly.
yeah, yeah,
Um, and that they're not always going to be a fit. You're going to think you're going to need these people for way longer than you will. And also, people just want to be advisors. And like, there are tons of people who are going to want equity in your business, but they're not going to want to invest. And that should tell you something.
yeah, yeah,
So,
yeah.
like,
Yeah, I think that's a really, really strong statement that you just made there, because there are a lot of those people that, yeah, they're not investors. They're just looking for some,
they want their little chunk, and they
yeah,
want to say they're involved,
yeah,
and they're looking to make their LinkedIn or their resume look way better. And they, yeah,
yeah, yeah. No,
yeah.
I know a few of those people. I've bumped into over the years. And they'll talk about all these companies that they're
Mm-hmm.
advising and invested in, and their big portfolio and stuff. And it's like that their level of understanding and knowledge of those companies. I don't think they really hardly pay attention in
They
any of
have
it.
never made a startup or been an investor in their life. They
Yeah,
work a like directorial or vice president job in a large corporation, and
yeah,
they are a subject matter expert on one very specific thing that kind of applies to you.
yeah.
But broadly, a lot of the problems that you're going to have aren't like the subject matter expert problems. Like broadly, you need people that have literally done things soup to nuts before.
Yeah.
Like you need builders.
And even then, though, and this is what an interesting thing that one of a previous interview that I did with another entrepreneur was talking about, and they're saying, even though that advisor maybe has walked in essentially the same shoes that you have, so they were in the same industry, it started a business and everything else, they've got that experience, excuse me, but the market conditions today are different than the market conditions then. The
Yeah,
competitive landscape is different. The technological landscape, the geopolitical, like everything is different than what it once was. And so the piece of advice that that person was giving everybody too was just, kind of like what you were saying earlier on, where it's trust your gut a bit on some of this stuff. So don't just because you respect them and that you really do value their opinion, don't take it just at face value. Use some critical thinking and apply your circumstances to that advice as well.
yeah. Learning how to say no is like incredibly important, like
Yeah,
disgustingly important.
yeah, yeah, totally. Now, if you were able to send a letter back in time to your younger entrepreneur self, what would you tell the younger Josh?
How much younger? Like, is this like 3 years ago or like 10 years ago?
Well, you can pick when that is. So tell us what age or how many years ago this was, and at what stage you
I
were
don't
at.
think 10 years ago me would have even listened to my advice now. I think he would have just ignored it and been like, this is stupid. So I'm going to go with like 3 years ago.
Okay, okay.
3 years ago, I would have just told myself to focus more on customer interviews and to really listen to what people are saying, and to also understand that I'm trying to think. This is like really specific to me, so I'm trying to draw away from that. But you, just because people will adopt your product early for some amount of small money, like pennies, like, you know what I mean, like, oh, we'll pay $75 a month for this, like that. Sometimes that does not mean that you should actually target that market. Like, that's
No.
not a good indication. Like, you need to find the real customers. So, and then don't, when those first customers start telling you, I need things like this in my product, I need things like that in my product, don't jump to like take care of those people's needs, because they're not the actual customer, and they're not paying you enough for you to actually change the product for them, and they're doing something that's self-serving, but it's not necessarily going to leave you in a winning position in the long term. So
Yeah.
yeah, yeah,
That's a difficult thing, I would imagine, to balance though, right? Because especially in the early days, when you're trying to figure out that product market fit, you have some, people that are piloting or testing it out. And so you have this really small subset of people who you think are going to be potentially your target audience, telling you these are some of their needs that are very much self-serving for sure,
yeah.
that can derail your product roadmap very quickly. But you also want to be responsive to that. So how do you balance that, especially in the earlier days?
Yeah, I don't know. I just think I'm still trying to figure that out. I think it's
Yeah,
just talk to more people. Talk to a
yeah,
diverse set of people too. Like, it's, if you don't, I think that when you're making a startup, you want to find a niche with a very large TAM, like an untapped niche that you can sell into. But I think there's so much focus on the earliest stages of like finding that niche and making these assumptions and making this whole business plan, that
yeah,
it forces people to tunnel vision before they've done the proper testing,
yeah,
and then they kind of screw themselves over.
yeah,
So it's like, just because, don't over plan, don't like stick like your like a post in the ground and be like, we are doing this and willing to die on that hill. Be more experimental. Treat it like a science project where you're like, let's see if these people like it. Let's see if these people like it. And be willing to shift, because like everyone's gonna be a critic and they're like, oh my god, you pivoted, oh my god, you did this. And it's like, no, like we're just looking and to see what's useful. We're gonna understand, and then we're going to weasel right in here. Like, I think that companies have a million little pivots to find product market fit, and it's not like they just had like one big pivot and then it's like, oh, we found it, eureka.
yeah,
Like, that's not how this works. But then everyone makes pivot seem like this wild 180-degree turnaround, when in reality, like, internally it doesn't work that way. It's just a
yeah,
bunch of little. So I guess
yeah.
be scientific about it. Don't die on the hill of your business plan.
Yeah. Yeah, and I love that, here's a guy I'm talking to right now whose business is built on data, like delivering the right kind of
Yeah.
data that people can action decisions off of, saying, being scientific about it. Like, look at the data, approach it with small incremental changes. We do the exact same thing. And this is my recommendation to anybody. Like, my space is on the marketing side. And so don't do wholesale changes. Like, we talk to companies all the time who say, we went to this agency to get some help, and they wanted to redo our whole website and rebrand and everything else, and it was tens of thousands of dollars later before they actually even had something that they could then go to market with, but they were already in market with what they had. So just do incremental changes, and it's amazing how those compound upon each other, and you, after a short period of time and a few iterations, you have a drastically improved, in our case, marketing ROI. In the case of product development, you're going to have a much better product market fit probably.
Mhm.
And so it's really important to approach it methodically, I think, and trust the data.
Yeah, you just have to be able to admit that you're wrong.
Oh man, yeah, yeah, yeah,
Yeah, like I think
Yeah.
that ego is probably the biggest problem overall in starting a new company. Is that
Yeah.
people are scared with their family or their friends are going to judge them for making the company. Like that's the first like
Yeah.
ego thing. You're like, okay, like I don't care what they think. But then suddenly you're like, well, like what do my customers think? And like I told my employees this, and well, I look like a hypocrite if I turn around and say I changed my mind.
Yeah.
And it's all about setting that culture up so nobody's ego is getting like super bruised all the time, and you can just be honest and transparent with people, and like
Yeah.
it's things are flowing right. I suppose I don't know how to word it.
Yeah, and this is a thing. I think if you're setting your company up with the right kind of vision and values and mission statement overall, there's so many ways you can achieve that, and so that gives you a tremendous amount of flexibility there. And so that's where you want to, I think, place your stake. Right?
Yeah,
Is on those elements, not on the feature set or the product roadmap or some of these other aspects of the business as it develops.
it has to be mission driven.
Yeah.
Like, and the mission doesn't have to be like, oh, we're going to change the world and feed all the hungry people. Like,
Yeah.
it
Yeah.
really can be way more simple than that. And I think
Yeah.
sometimes people actually screw themselves over by having these missions that are so grandiose and so vague that
Yeah.
it doesn't actually. It's almost like there's no mission at all when it's
Yeah.
so vague.
Yeah.
So
Yeah.
it's like
You
just do
can't
something
really, it's
specific.
not tangible enough, right? It's hard
Yeah,
for your employees and your customers, I think, to really understand the role that the company's going to play within that.
yeah.
Yeah.
It's like just do one thing really well.
Yeah. Yeah, totally. Well, this has been such a pleasure, Josh. I really appreciate taking the time today to chat with us. If somebody wanted to find out more about Incued or to connect with you, what would be the best way for them to do that?
You can go to incued.com is where you'll find Incued.
Yeah, and
You can
that's
find me on.
INCUED, just for those who don't know.
Yep. And then you can look up Josh Furstoss on LinkedIn or Twitter or Instagram or whatever you please, or I guess is like your preference.
Yeah.
That's Furstoss is Furstoss. But you can just Google me and it'll pretty much come up.
And yeah, on Threads yet? Are you there?
What's
That's
Threads? Is this like
that's Facebook or Meta just launched a Twitter competitor, so it's going to
oh,
be the Twitter killer everybody's talking about. So
I'll
Threads.
see if it actually does anything and then I'll consider putting effort in.
Yeah, that's right. Well, thanks again. I really appreciate it. And for those of you who are watching this episode or listening to it and really enjoyed it, and you want to check out the archives, head over to amplifyyourbusiness.ca. You're going to find all the videos there, or you can just search Amplify Your Business on your favorite podcasting platform. You're going to find our backlog and our future episodes there as well. And just a shout out, we talk about in the secret sauce to building a business, which is based off of interviews just like this. We talk about the importance of advisory committee or boards, as well as some of the other topics actually that we touched on a little bit here today, Josh. So for those who want to do a little bit of reading, check it out. That's available as well at amplifyyourbusiness.ca. Until next time, everybody have a prosperous day. And thank you so much, Josh. Really appreciate it.